good.
Absolutely. Nigel, thanks very much for that. Amit Gupta is head of equities, PMS, Motilal Oswal Private Wealth. Amit, good afternoon. Good to have you with us here on the program. I mean, the small cap index is where some of the action is concentrated, I guess, because it also fell the most, has seen the most amount of damage. The Nifty has been a few percentage points away from its all-time highs. Not so much with the small cap space. What's your view specifically there in that segment, in that part of the market, Amit? Have you seen a durable turn?
Yeah, so I think the clouds are getting over. So last few quarters we had seen, not very great earnings from the small cap category. In fact, it was struggling to come in positive, and we were seeing some good earnings that time actually in the quality, some high quality mid cap stocks. But small caps in a very emerging themes, I think this is a time to look at. Because it is not only the US deal, though the US deal was much heavier on the sentiment. Once it is over and in between government has done some other deals also or on the verge of getting those deals, the GCC, the Canada, and previously Oman and New Zealand already done. So I think it's a double positive, which I was discussing before, that once because we were discussing with one of the company that how they are managing this particular problem in US right now. So they said that in the non-US tariff revenues, they are trying to increase their margins. So the companies have worked upon this particular tough phase to better the margins in the non-US areas, and which is, I think, a more positive, because once this US market is opened and the other markets simultaneously are going to be opened, then I think from the volume perspective and from the margin perspective, it is going to be better. Now, the next thing is the capacity addition, because I think the demand is going to surge, and that is where you have to expand your capacities. And that we will see in certain areas now wherever the high growth sectors are present. So we feel the electronics is one of the segment in that area, possibly textiles, which was badly hit. I think this is one space where stocks have participated, but still there are stocks which can still participate going forward.
So are you looking to aggressively invest right now, Amit, in areas like textiles, electronics? And how much of the money that you're getting right now would you invest in small caps versus the large cap?
Yeah. So we are doing this. See, initially, the companies which were badly hit, they had seen a sharp reaction on the higher side, but still there are companies like KPR Mill which are available. If you look at the return on equity in the last few years, they used to give 19-20% of return on equity. Pearl Global, which used to give 20% of return on equity in such a high capital intensive space. So we feel that throws an opportunity. In fact, some yarn manufacturers or fabric players like Vardhaman Textile, where you have an excellent management, and they are also going to see the surge of, I think, the volumes going forward, and which was there subdued for quite some time. And I think that this is where there is a room. There is a room in this particular space. When rupee USD INR is still around 90, at least a few quarters now on an immediate basis, they can feel a comfort. And going forward, there was a lot of fear that the customers can go away. And I think that fear also is going off. So many stocks are there which are much far away from the 52-week highs. I think there is a lot of space in those stocks.
Yeah, lots of space in those stocks. Let's just look at Gokuldas. Gokuldas is up 8% now. Yeah. So it's not at the day's high still, 850. Actually, it got to 850 today, which means, I mean, basically it's, the high on Friday was about, not Friday, actually Thursday was about 844. And then Thursday it ended lower. Friday it sold off a little bit more, but it's basically making up for all of it as it comes back very, very strongly right now. Amit, any other names, especially in this aerospace, defense, but aerospace mostly, not like other defense, but aviation. There's this new company which came to the market, Equities. I'm not sure if you saw it. I mean, they basically make, aircraft parts largely for commercial aviation. They got some defense business as well, or anything like that in the forging space, or, have you looked at that space?
Yeah, so defense and aerospace, there are certain companies which are present in both of these segments. You can take an example of MTAR Technology. right? So likewise, there are stocks which we feel that they will garner a good amount of orders. So, and almost 200, if airplanes are required now, and almost I think $300 million is required for each plane. So you can expect 60, 70, 60, $65 billion of orders actually going to be given. And this is where these companies definitely are going to be benefited. So I think, yes, a lot of bottom up is required now, considering that most of the defense stocks also are down. We have not seen, despite 17.5% of capex increase in the budget, we have not seen that kind of euphoria coming back in the defense space. And coupling with the aerospace, I think it's definitely positive. L&T, for example, L&T is also moving into space. And L&T is also the beneficiary of nuclear energy, because government says that data centers, yes, thermal power is there, and the next one may be nuclear, and L&T is expanding into that area. So I think this is one large cap which is very beautifully placed, considering the valuations also. And recently it had declined because we had seen one of the order in the Middle East, it was not accepted. So it has seen that phase and now coming back, and this is where we feel the Nifty will get support from these large caps, which are very attractively valued also, because they have spent couple of years doing nothing.
All right, final question. What about real estate? There's been a big sale on out there, not in terms of home prices, but stock prices. Some of them down 30, 40, 50%, or even more. Do you think that since, on-ground fundamentals are pretty okay, but the stock prices have come down, are they providing a good entry opportunity? Stocks like Godrej Properties, for example, are up close to 6% and holding strong.
So this recovery is definitely because they have fallen significantly. There was a lull period when the broader capital market also was not doing good. When the portfolios do well, then the wealth is created and the people actually look for more expenditure into the luxury homes. That was slowly, we felt that it was missing, and it can come back. It may take some time from the residential space, but the commercial is booming. We feel REITs, if you look at, they have done really well because they are linked to the commercial areas. GCCs are expanding, almost 1,600 GCCs we have in India, and it is going to increase further. I think the commercial real estate is definitely doing well, and that's why REITs we preferred for some time. But now the valuation, because interest rates, after the interest rate cuts, we feel that real estate is at a better price, but residential is more skewed towards luxury, and that's why you have to be very selective in that area.
All right. Amit, thanks very much for that. I really appreciate your time here, and interesting conversation as always. I mean, we could go on, bunch more questions, but I guess we'll leave it for the next time. Kalyan is up 15.